At the top of the show, I talked about we have to avoid. But as the market takes an ugly turn, what's worth buying into weakness? All right? I think we need to focus on stocks that can keep working regardless of whether or not we successfully reopen the economy. Stocks that arguably do better with half the world stuck in quarantine because we don't know what the results of this reopening is going to bring us. That's why tonight we're going off the charts with help of Bob Lang. He's the founder of ExplosiveOptions.net, as well as being the brilliant technician and the all-star duo behind TheStreet.com's Trifecta Stocks newsletter. He's also the author of a book called Know Your Options. We're going to check out a handful of high-quality semiconductor names that we talk about a lot. Think Nvidia, AMD, and Qualcomm. These three companies are textbook examples of great long-term stories that have thrived during the stay-at-home economy. AMD and Nvidia have tons of gaming and data center exposure, two areas that work when everyone's stuck at home. Qualcomm is essential to the 5G wireless build-out multi-year, something we desperately need. The internet is going to be the only place where we can congregate. You need 5G. It won't look like this anymore when you're talking. See that? I mean, you're always stuck in the worst, most hideous position. Fabrizio Freda from, he's dead right from Estee Lauder. You zoomy generation, you got to wear a lot of makeup. Now, Nvidia, AMD, and Qualcomm all got obliterated when the market crashed in February and March, but that's because panic sellers made no effort to differentiate between winners and losers, kind of like what's happening now, huh? They threw the proverbial baby out with the bathwater. Since the bottom, these high-quality semiconductor names have come roaring back. It's happening again after the 1-2 punch of Dr. Fauci telling us it will be dangerous to reopen the economy too quickly. He could be right. And Fed Chairman Jay Powell, who was so negative today, he was saying the slog is going to be long. Boy, these guys are really on the opposite side of the president, aren't they? Which brings us to Bob Lang's key observation. When you see these momentum stocks pushing higher with a strong wind at the racks, they can often keep rallying for a lot longer than most people expect, even if those rallies have temporarily been interrupted. All right, so let's start with the daily chart of total Cramer fave, Nvidia. Yes, and Nvidia, my dog, is now 13 years old and has got arthritis and it just doesn't look so good, so just be aware. All right, anyway. Nvidia, the stock, broke out in mid-April. Lang notes that it's shown a ton of power, stock chugging higher on strong volume. Boy, do we ever love that. How powerful? Just yesterday, Nvidia hit an all-time high. So remember, the market came down like this. Most stocks did not do that. That's really good, this one. Lang's betting on more upside. First, there's the Ichimoku Cloud. That's the green stuff. Technical tool that combines a bunch of moving averages. Gives you a one-glance read on the situation. It's painting a pretty bullish picture. Right now, the cloud is green, it's trending higher, and it's expanding. Those are the three things you want to see from that indicator. Second, there's the moving average convergence divergence, the MACD. Oh, do we love that? That's an important gauge of momentum. It tells you ahead of time what's supposed to happen. Recently made a bullish crossover where the black line goes above the red one, okay? That's one of the most reliable buy signals out there. Boom. Don't want this to go back down. Third, there's one that we've never talked about. It's called the ADX. That's the average directional index. Measures the strength of a given trend. The ADX just made a bullish crossover. So we're looking at ADX, okay? Right there. It keeps trending higher. Well, it's another positive sign. The only fly in the ointment, NVIDIA's got a ceiling of resistance above 10 points. And that's currently where the stock's trading. It could get boxed right there above 10. But it could jump that hurdle, and the stock could have a lot more upside, which is really incredible. But this may be the best company in tech right now. It really may be. All right, anyway, put it all together, and Lang thinks NVIDIA's got the prettiest chart out there. That's right. And there's a reason they own Nvidia for the Trifecta Stocks newsletter. I think Lang's dead right. It's why we also own this one from my charitable trust, which you can follow along by joining the ActionAlertsPlus.com club. By the way, I tend to talk about this one at our monthly conference call tomorrow at 11:30 because it is textbook of what you can own in this environment. All right, now, what about NVIDIA's weekly chart? Let's look at a little longer time frame. On a longer-term look, Lang says this stock is incredibly strong. There's the accumulation distribution line down at the bottom, the AD line, okay, which tells you where the big institutional money managers are trying to buy the stock or dump it. Even during the sell-off in March, this thing showed power, which is really incredible. Looking good. Meanwhile, the weekly Ichimoku Cloud, once again, good shape. MACD just made a bullish crossover. Taking everything into consideration, Lang believes NVIDIA could make a run at 400 by year end. even more bullish than I am. Next up, check out Lisa Su's chart. Yes, this is AMD. She's the CEO. This is a daily. The first thing that jumps out at Lang, AMD's got an inverse head and shoulder pattern. Well, how much do we love that? Okay. That's always a reliable sign of upside. It actually may be the most reliable bullish formation in the book. I was interested that he spotted that because I didn't see it immediately. So I thought it was kind of too much, like this was too low. But he's got it going. On top of that, the MACD indicator is poised to make a bullish crossover down here, okay? He thinks this happens. He's anticipating it. I usually don't like to do that. I usually wait to see it, but he's anticipating. Since the bottom, AMD's made a pattern of higher highs and higher lows, which is exactly what chartists like to see. Plus, when the stock pulled back to the high 40s after its recent earnings report, that turned out to be a terrific buying opportunity, as I told you it would. Over the last couple of days, AMD's fallen from 56 to 52, and it's looking ugly. And Lang sees this, though, as a great entry point. If the stock can break out above its old highs in the high 50s, he's betting it's a clear shot to the mid-60s. So that's pretty positive, too. I know a lot of you like that stock. Finally, there's the daily chart of Qualcomm, not talked about enough. As Lang sees it, this is a textbook picture of a breakout waiting to happen. Now, this is really interesting because a lot of people left up this one for dead. Qualcomm's currently at 78. It's got about a 3 and change yield. Ceiling resistant at 82. The stock can burst through that ceiling and break out of this triangle pattern that he sees, which would be typical. He thinks it's up, up, and away to much higher levels, and this thing did trade at much higher levels at one point. Lang's absolutely betting on this breakout as Qualcomm's another stock they own for the trifecta stocks portfolio. His reasoning, aside from the fundamentals of this fabulous wireless technology play, Lang's feeling confident about the chart. Qualcomm's volume trends are positive, so we look at some volume, okay? See a breakout on bigger volume there. The relative strength index, that's another important momentum index down here, looks tremendous. Very steep upward slope. We want to see that. But it's still nowhere near being overbought. The Ichimoku cloud recently turned green. It's now expanding. It's another positive. I like that Ichimoku thing. While Qualcomm's pulling back again today, but not that much. Since the bottom in March, every dip in this thing has been a fantastic buying opportunity. Again, it's 5G. If the stock can break out above 82, Lang believes it can make a run for its old highs in the mid-90s. I am with him on this, and when he did the work on it, I was thinking, wow, how many more semis can we own for the Action Alert portfolio? Bottom line, in a market that's suddenly rolling over after an epic rebound from the lows, we need to circle the wagons around high-quality stocks that we can confidently buy into this newfound weakness because they'll be able to make a comeback even if the economy doesn't and even if the market keeps going lower. Nvidia, AMD, and Qualcomm all fit the bill, and the charts interpreted by Bob Lang suggest that all three could have a lot more room to run. I may be a little more negative than him. I may think that this could have a little downside, but then I'm with him. I think we should take some questions. Let's go to Jeff in Arizona. Jeff.
Hey, Jim. Thanks for taking my call.
Of course.
My wife and I want to start by thanking you for saving us in the fall of 2008. We heeded your wise advice and raised cash to cover our expenses for a year, and it really got us through the financial crisis.
Oh, man, I'm so glad. I know that was a call, a widely criticized call, as all the good ones often are. But you know what? Thank you. I'm glad you remember it. We dodged 46%. What's going on?
Well, my wife and I have a modest position in Ameriprise Financial. We took your advice and we actually read through the earnings call transcript, and it looks like they had truly terrific earnings. They're in a good cash position. The outlook looks good for the future. They did suspend the buyback. The price to earnings ratio is like at 5, Jim. Jeez. And I know it's probably because it's in the financial industry, but they did increase the dividend for, I think, what's the 15th year in a row. So we're just looking for your opinion on whether Ameriprise Financial is still a great investment.
I think it's being hurt by low rates. It sells at 7 times earnings. I don't like the financials. We've sold almost every financial from my charitable trust, almost every one. This would be one, I guess, is a keeper because it's just so inexpensive. But beware, I think the financials are not good in general. I like fintech more like everybody else. Nothing really special there, but the financials are tough. All right, it's time to circle back to high-quality stocks that could do well, and these are growth stocks, by the way, even if the economy doesn't open back up, and that's Qualcomm, AMD, and Nvidia. All right, much more Mad Money ahead, including my exclusive with PSE&G. How's the company dealing with demand, and how the company dealing with COVID? Then cruise lines continue to show buoyancy despite the uncertainty. I'll explain how and why, and all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.